Going on YouTube, my name is Tyler with a Dividend Stock King with another video. And before I begin, I'm not getting financial advice, or financial, whatever. I'm not a financial advisor, so please seek one for financial needs. Today we're talking about something I've been thinking about for a little while: real estate versus dividend investing. And they're both. This is my personal opinion, right? I don't have a rental property, but I'm planning on owning some in the future. I think real estate is a great tool or a great thing to have in your portfolio because you have something that grows over time and it pays a month. It's like, to me, like a monthly dividend stock or ETF. It grows over time, a lot of money over time. You get that monthly income. You have that generational wealth where you can pass it down to your generation or pass it on to your kids. So it's a good asset to have in the family. It's great for leverage as well. You use it for getting loans. You can use it, stuff like that, for loans and for leverage if you need leverage. And you own something, you own something that can produce income. So that's why I like real estate. Real estate has also great tax benefits. Now, I don't know all of them, but I know you write off depreciation on the home. We write off the things you buy for the home to fix up. You can write off a lot of things on a rental property. And your rental property, if you're a rental property, you could also make that a business. So you can pretty much, if a rental, turn it into an easy business. What's your business? I have a real estate. I'm a real estate. I'm a real estate, rental, and you can pretty much turn it into a business. So you could be a business, and you get the business benefits with the real estate benefits. That's awesome too. But the downside of that is it's hard to get into. Now, everybody can come up with the money for a down payment or money for repairs, right? A lot of people can't do that, number one. Number two, with housing today, with the average home $400,000, it's harder to get into, right? Also, good tenant, bad tenant. Now, I'm not here to give you, you have bad tenants and you'll mess your whole house up. I don't really like those stories because I believe you might have a great tenant, so you have a great tenant in your place, but you're going to have to clean up when they move in, clean out when they move out, do little repairs here and there. They may call you a few times a year, which is fine. It covers the territory. But like my kids can't own real estate right now. They can't go out there and buy a property for real estate right now. Older people in their 80, 85, like my grandmother, for example, she wouldn't go do real estate. She's too old for that, right? Older people won't do real estate. And also you have to do lawn care. I'm not talking bad about it because people will always, we have to do the tenants and the tenants are bad. And no, I believe you have a good tenant, right? You got to do lawn care. And there's downside, but there's a lot of upsides to that compared to dividend investing. That it has way more pros. They don't have the tax benefits because you will pay tax on that money, and you don't have a business per se because you don't have a business. But for passive income, it's fantastic. It's great. Anyone could do it with a small amount of money. I mean, you could do this with $10, $20, right? You could do $10, $20 and you get you a few ETFs or a few stocks. So that's great too, right? That's great. I like that, number one. Anyone could do it. My grandmother, 86, she could do this too. She could do this and get passive income while to worry about a tenant or worry about getting a loan or worry about paying back a loan. She can start today and build something a few years. Kids can do this. You can start a custodial brokerage account and your kids can start buying these funds. If you don't have any kids, you can put this in your Roth IRA, right? You can start with a little bit of money. You can start with $10. $20. You start very, very small and work your way up to a bigger number. The barrier to entry is barely, you heard the word, there's a low barrier to entry. This is lower than that, because all you have to really do is, open a brokerage account and deposit money. That's it. And buy the stock, and that's it. It's you can do this in like 20 minutes. It's that simple. So it's way easier to get into that. The downside of that is, ETFs will go down in price, right? Some are expensive, some are cheaper. They will go down in price. You will pay tax on that money that you receive on the dividend income. But that's the few down things on the ETFs that I experienced in the last 3-4 years. That it'll go down in price. With dividend stocks itself from companies or even ETFs, they could decide to suspend your dividend or not pay a dividend. When during COVID, I had a lot of hotel REITs that pay a dividend every month. Well, they suspended the dividend, meaning they stopped paying it for a while, or they cut the dividend. So you're at the mercy of the board of directors on that. You get dividends. You're on the mercy of them. Right? So again, you can not get paid at all or get slashed. They're paying 20 cents, they get paid 10 cents, making less money. So you got to prepare for that as well. So there are downsides to dividend investing. I mean, both have downsides. I believe the dividend investing has a little edge because you can literally start today. You can start right now. And the other thing I like about dividend investing is, say I run a property and you make $400, $500. That's a good number. $500 in rental income. Well, you can't put that back into the house and make a little bit more money next month, right? Well, dividend investing, if I don't need the money, right, I could put that money back into that stock, and the next month I can make a little bit more money and take that dividend and put it back into it, and it grows, it compounds itself. So I'm making more money over time. Well, real estate investing, you really can't increase your rent. You're pretty much locked in for a year or 4 or 5 years or whatever you have been tenant for. You can't raise the rent. You sign a lease for a year and you can't raise the rent in month 6 or 7. And they sign a new lease, the rent might go up. And you have to let that person know, hey, your rent's going up, right? And then that person, rent going up, either they accept it or they reject it. You know what I'm saying? So, but with dividend investing, it's not like that. You can easily just take the dividend, I don't need the $500. I just reinvest it and put it back into different funds or the same fund. That way, the next time you get more shares, you make a little bit more money. So I do enjoy that part. So I believe you should have both a portfolio. You should have a dividend portfolio and a portfolio of real estate. You should pick one or the other because real estate is fantastic as well. I think that, like for me, for example, with $31,000 making $1,800 a month, I could easily transition into real estate, keep my portfolio. Now I go get a rental property because my what I want to do is make money outside of a job. So real estate is up there, dividend investing is up there, so get business is up there, YouTube is up there, online business is up there. I'm trying to make money outside of a job, right? And also with the rental property that, if you're out of state, it'll be a little hard. You can still live out of state, probably out of state, but at some point, you may have to go to the house and clean up and make sure, unless you know somebody or pay someone to go in, clean up, fix up, give you the key. You know what I'm saying? But with dividend investing, I can live anywhere in the world. It don't matter. The money comes right to my phone. It comes right to my phone. So there are a lot of pros and cons to both. I believe that we should have both of these. You can start dividend investing today and put some money in and put dividend reinvestment in and get those income going and generating for you, and also sell for a rental property. Because guess what? If you can make $2,000 a month in dividends and get 2 rental properties, you're way better off than a lot of people, because dividend investing should change your mindset on investing. So that's the end of my video. I believe both are great. I'm gonna own both. And hey, look, one quick tip: if you already have a house today, right, you could pay down that house. You can start paying it down, and that's what my wife and I are doing. My wife and I we're paying down our home right now. We're buying dividend ETFs and stocks at the same time. Now, if you were to, now we're planning on paying our house off within a year. Once the house is paid off, because we've been doing it for so long, now I have options. I can live here and put a boatload in my brokerage account, or I can fix up the property, get another home, rent this house out. Now I'm making $1,800 a month. You try tax and insurance. I'll probably make $1,500 a month in rental income for one tenant. I own the property. It's paid off. I can pass on to my kids. I get tax benefits from that and write-offs. I get some of that cash flows. It's outside the stock market, and I'm making about $2,000 a month in dividends. So altogether, I make $3,500 a month, which is great, right? That's fantastic. So if you have a home today, if you had it for 8-9 years, start paying it down. You can pay it down while you're dividend investing. So maybe if you're retired and you have your house paid off, but now you're making, $3,000 a month in dividends, right? Now you have a Roth IRA and a 401k and a paid off house. So you're living really nice. So that's my plan. Please like and share the video, and I'll see you next time.